decades, we've been sold a stability myth. Go to work, go to school, get good grades, buy a house, work for 40 years, retire, comfortable. It sounds good. The problem is that history tells us a very different story. The UK has never been truly stable, and neither has the global economy. And that assumption may be creating risks that are now only starting to emerge. My name is Karen Newton. I am a business and wealth strategist, founder of Karen Newton International. So welcome, bonjour, hola, ni hao. Let's find out more about the stability myth. I'm going to diversify a little bit here because this week when I was reading the news, 3 headlines caught my attention. And I'm going to show you how the thread behind those stories is actually the stability myth. So one of the stories was by Jeremy Hunt. He's the former Chancellor for the UK. He was involved with the National Health. And he wrote this article about efforts to improve public sector productivity and to bring it closer to private sector productivity. Now, that's all good and well. And yes, we would love to have public sector services. Any country would love to have public service sectors that are able to be run as a business and be profitable. But the problem is they are not there for that reason. They are actually there to provide a nationwide service. Successive governments try to bring in an efficiency, and that efficiency damages the ability of those businesses to meet unexpected demands. Now, a second story that caught my eye is about defence in the UK. And again, the defence system has been streamlined, supposedly for efficiency, and has yet left the country in a vulnerable state. And the third story that caught my eye was the administration of a UK cargo airline. It went into administration at the end of last month, but that was only announced a couple of days ago. Now, at a glance, these stories all appear unrelated. But when you look closer at them, then you see a theme starting to emerge. And for years, governments, not just in the UK, but governments around the world have pursued efficiency as the ultimate objective. Reduce costs, eliminate waste, streamline processes, improve productivity, and operate leaner. And they sound like really good ideas, especially when you have to fund these public services. And there has been improvements in some of these businesses. But the problem arises when efficiency becomes the measure of how well the business is doing. And we are seeing a lot of failures that suggest that the efficiency drive has been too great for those particular industries. Now, years ago, I went to university and I studied quality management systems. And one area of that I was always really uncomfortable about was the just-in-time concept. Now, just-in-time says you carry minimal stock. That means you reduce your storage costs. you free up cash flow, and you order supplies only when needed. And that sounds really good. And in a stable environment, that does work. However, as I've already told you, stability is a myth because we are seeing supply chains fail, shipping routes be disrupted. You only have to look at what is happening in the Hormuz Strait at the moment, where the oil supplies are being affected. That is shipping routes being affected. We've got fuel costs, and we're finding that many countries do not have sufficient supplies to be able to meet the needs of a country for long term. And another area that this comes through, every year we see water restrictions in the UK. Water authorities are not providing sufficient services, and water is an essential service, and they don't have sufficient reserves or sufficient capacity to be able to supply the demand in warmer months. Now, when we look at all these things, we suddenly see that inventory that looked wasteful yesterday actually becomes essential today. The spare capacity that appeared inefficient at the start becomes a lifeline to those people that need it. The backup supplier that was seen unnecessary becomes invaluable. And so this just in time doesn't provide the resilience that it should provide, because people buy into the myth of stability instead of building their just-in-time model based on instability. So the stability myth is perhaps the biggest lesson and the biggest illusion that affects economies and affects yours and my investment and incomes every day. We often speak about returning to the norm. I remember interest rates being down at 0.1%, 0.2%. The talk that we had to get interest rates back to the norm of 5%. But for a decade, those interest rates remained really low. That was the new norm. Today, the 5% interest rates are to control inflation. That is not the norm. Okay? We have this instability message, this conflicting message. So when we look at all this, we know that booms and busts they're not abnormalities. They happen all the time. History shows us that it happens. We get inflation frequently because there are things that affect the economy externally or we don't have control over. What I have found is that when you study everything that happens in the markets, there is only one thing that is stable, and that's the cycle. We know the cycle is going to go up. We know it's going to come down. And surprisingly, when we study investment cycles, there's actually a pattern to those cycles. Now, it can vary slightly. It's not absolutely rigid. But what we do see is, property often happens over a 9-year cycle. The boom and bust of the economy happens over around a 10-year cycle. We have crypto, and that has about a 4-year cycle. Now, as I said, there can be variances, but we know that the cycle is going to go up and down. And that is the stability within an economy, within a global economy. So rather than relying on a single source of income or a single path to financial security, I believe there is a stronger approach. And that approach is to build an ecosystem. Now, you'll often hear me talk about be your own, and be your own ecosystem is one of those aspects of my belief in what happens within the economy. Because when you become be your own, that means you're taking control. You're not listening to the myths that are out there. You're not listening to what other people are saying, buy this now or sell this now. You have your own decision-making system for determining what we do and when we do it. An ecosystem can include business, it can include investments, property, it's even skills, mindset, intellectual property. We have multiple income streams. These things are seen as individual niches, aspects of whatever you want to be doing. However, they all link together. And that is what I believe the missing part within all the models that are out there that people are teaching. They teach one thing, but it's multiple things that interconnect, that builds an ecosystem. That ecosystem creates the resilience. So if one area goes down in the investment cycle, and we've already talked about different investment cycles, other areas are actually going up. That gives us resilience. One of my other areas that bugs me, if you like, that frustrates me, is when we're told to delay gratification. How long do you delay it for? Some people will say, I want 1 million in the bank and then I can do such and such. Someone else will say, well, I need 10 million in the bank. I believe that everyone can build the lifestyle that they choose and use an ecosystem to support that lifestyle, and that it is all interconnected. So, for example, if you want to have a holiday home, do you need to wait until you've got 100, 200,000 in the bank account to go and buy a holiday home? Or do you use alternative investment strategies, acquire the holiday home, use it when you want to use it, because you're not likely to use it all year round, and then use rental income to pay and support that holiday home? You've already started to build the lifestyle that you want. That is just an example of how you can change the way you think about investments, change that myth that you have to wait until you've got everything, all your ducks in a row to be able to go and live the lifestyle that you want to live. Today, the investment tools are there. The ability is there to actually create your lifestyle and then build the ecosystem that supports it. And when you use investment cycles, you can actually build resilience into the model that you are creating. There's a few points there that take a little bit of understanding, but I believe everyone can be a lifestyle investor. Decide on the type of lifestyle that you want, then you bring in the tools to support that lifestyle. And that brings me right back to when I was talking about the stability myth. Nothing is stable. So what we do is we use investment cycles. We work multiple cycles to give us the income to support the lifestyle that we choose to live. That's creating resilience. So that's one of the reasons that I believe individuals, businesses, investors should spend less time trying to predict returns and profit based on stability and more time preparing for instability. Expect change rather than assume continuity. Now, that is not pessimistic view of the future. Right? It is simply acknowledging how economies have always behaved. They've always had boom and bust. They've always gone up and they've gone down. So people and organizations that survive those difficult times are really those that optimize for perfect conditions. Okay. More often, they're the ones who prepare for the imperfect ones. So perhaps the question we should be asking is no longer, is the economy stable? An assumption that I'm going to do this, this, and this. But the question is, how do you build resilience in a world where stability has always been temporary?
Disclaimer: the information shared in this podcast is for educational and informational purposes only. It is not intended as financial, investment, legal, or tax advice and should not be construed as such. I am not a licensed financial advisor, and the strategies discussed are based on personal experience and general market knowledge. Always do your own research and consider your individual financial goals, risk tolerance, and personal circumstances before making any investment decisions. I strongly recommend that you consult with a qualified financial advisor or licensed professional before acting on any information discussed in this podcast. Investing involves risk, and past performance is not indicative of future results. By listening to this podcast, you agree that the host and associated entities are not responsible for any losses or damages arising from the use of this content.